Okay, ladies and gentlemen, we're now going to look at your UNISA tutorial letter or study guide 001, and you're going to look at exercise 1.1M. Okay, now this is on page 11 of the 2014 study guide. Okay, so let's now have a look. You are given some information. You've already done this question. If you are looking at it for the first time with me, push pause and go give it a try by yourself, please. Okay, it doesn't help for me to feed it to you. You need to try after working through the previous video. You have the tools, give it a bash. So on the 1st of March 20.2, Louis CC purchased 100 ordinary shares of 100 Rand each in Marble Limited, a company listed on the JSE, hereafter referred to as the JSE. The purpose of this investment was speculative in nature. They're holding it in short to make short-term profits from selling it as soon as the price goes up. The transaction costs were 500 Rand. On 28th of February, the end of the financial year, that's our reporting date, the shares were trading at 125 Rand per share. So there's been an increase of 125 minus 100, 25 Rand. Okay, record the above transactions in the General Journal of Louis CC. Okay, so now we're going to be a bit more formal here, guys, because you needed to give this a proper try. So first, you put the name on the top, Louis CC, and this is just a general journal, right? It's not a financial statement, so there's no date required up top. Then we're going to put through the transactions and the journals specifically on dates. Give your journals a debit and a credit column. Okay, I'm going to draw a line down the middle here. And we're going to get going. So, Journal 1. Journal 1 on the 1st of March 20.2. Take note, I'm telling the users the date that I have to pass this journal on. First up, I'm going to write in my debit investment in shares. Okay, and that was in Marble Limited. Let's see if I can fit it in. Okay, so that was in Marble Limited. And I'm going to, you'll see UNISA combines the two journals that I do separately. I like to think of each thought process separately. It works perfectly fine. So I'm going to go credit bank. We will go and look at UNISA's solution after this just so you feel comfortable. And that, ladies and gentlemen, if I put through, I must put through a narration. And I must go, the narration is just describing what it actually is. Initial recognition of investment. Okay, and I'm going to do the workings below. It is 100 Rand times 100 shares. Okay, so that's all working. I like putting it in brackets. It helps the lecture, your marker, separate what's journal versus narrations and workings. That is 10,000 debit, credit 10,000. Okay, so I've made the financial asset bigger, I've debited it, and I've made the other financial asset, actually, bank, the cash balance, smaller by crediting it. Okay, I put a little line underneath. That is Journal 1 done. Journal 2, still on the 1st of March, so I don't need to put the date here again, but let's do it to rather be safe. 1st of March 20.2. So I'm going to extend this page a little bit. Sorry, I messed that up a little. Okay, so on the 1st of March, what do we have to do? We now need to record the transaction expense. So I'm going to go debit investment expense. Okay, that is a transaction cost. Let's think about that for a second. That is a expense. Yes, the expense is getting bigger, but it's going to happen on the debit side, right? And we were told that that was 500. Related to every increase in expense, if there's a debit, there must be a credit, right? And the credit is either going to be an increase in the liability, because we owe someone, or a decrease in an asset. What's happened here? Here we've actually paid this, right? So we will go credit bank because the bank is going to get smaller on the credit side. Okay, my narration here is just transaction costs recognized. Okay, transaction costs on investments. And that was given to you, right? As 500. And I rule off, and my second journal's done. Both of those journals on the 1st of March, nice and easy. Next up, in journal 3, we're now going to go to year end, right? And year end is 28th of February 20.3. And what I have to do here, I'm going to start the debits and credits again. Well, over here, what do I need to do? I need to take the expense, okay, and I need to close it off to the profit or loss account. So I'm going to debit profit or loss account. And I'm going to credit this investment expense. I'm not going to write transaction cost out again. Investment expense is perfectly fine. And I'll now close that account out to the profit or loss account. Okay, going on to use a new page now just because we're running out of space. I'm going to once again have my debits and credits at the top. And here's the really important thing now, right? Is that journal number 4 is going to be the remeasurement of the financial asset to fair value at the reporting date. Okay, so this is also going to be the 28th of February 20.3. And we are going to go and debit the investment, make it bigger. Debit investments in shares. Okay, and that was Marble Limited. And we've got to credit something, right? What are we going to credit? Well, I told you the fair value gain is going to go to profit or loss. So we're going to put through a fair value gain on financial assets to profit or loss. Now, there's a much longer wording in the tutorial letter. It might be worthwhile to write out the full name that UNISA gives you. Have a look, see if you can fit it in. I battle to on my screen, right? Now, this fair value gain, we need to write out our the description of what the journal is. So this will be a gain on the fair value remeasurement of the investment in shares. Okay, our working for that, well, that's quite nice and easy. The working is going to be 125 minus the original cost of 100 times by 100 shares. Okay, that gives me 2,500. Debit the asset, credit the income, 2,500. What do we have to remember to do? Let's just quickly put this down properly. Fair value gain in profit or loss. Let's not be lazy, sorry. Okay, so we're crediting fair value gain in profit or loss. Next up, we need to take that gain, and because it's in profit or loss, we need to close it out, right? So I'm going to go debit the fair value gain in profit or loss, the 2,500, just taking it across from here, reversing it out, and putting it into the clearing account called the profit or loss account to close it out. $2,500, and that is just described as closing off the gain on the financial asset. Okay, we're not quite done yet, guys. Well, according to the solution we've done, I want to add a bit more value here, right? So let's understand that this is going to land up in a statement of profit or loss at the end of the day, right? And in the statement of profit and loss, you're going to write it out in its totality, statement of profit or loss, and other comprehensive income. Remember, for the period ending. Okay, and the period was ending 28th of February 20.3. Okay, you're going to have your revenue like normal, your cost of sales. Okay, all there. I'm just doing X's, gross profit will be the balancing figure, and then you're going to have other income, and this is where you're going to put your investment income. Other income, and you just have a little sub amount there called fair value gains on financial assets. Okay, and that fair value gain was 2,500. Okay, and then you carry on with the rest of the income statement as you've learned before. Great, that gives you a really good working. After doing the illustration with me in my previous video, doing this class example from the UNISA tutorial guide, you should be very comfortable with the basics of financial assets. They are almost identically the same at this level for every single question. Not highly examined, so I don't want you to stress too much about it, but make sure you've got the basic workings. Thank you, guys.